We've been busy preparing for the holidays and adjusting to our new financial freedom. Here's a quick update on our family life and the top stocks we're buying now.
Hey guys, it's Amber and Jared from Holy City Family. Our mission is to empower you to achieve financial independence so that you can pursue your dreams and ambitions in life.
Be sure to subscribe to our channel so that you don't miss any of our new videos on Sundays at 10 a.m. And just so you know, we've got some amazing content lined up for you guys. We've got our review of our 2022 annual planning strategy. We're going to provide a detailed stock analysis of NEO and Rivian. And then we're also going to share our 2021 year in review.
Subscribe to our channel. Please. Subscribe to our channel. Can you please? Can you please?
After we recovered from our Halloween candy hangovers,
You're just 11 years old, but you have a massive Halloween hangover from the last day of October. It's the worst Monday in school.
thanks Holderness family, we decided to kick off November with flu shots.
Hey! What are you guys doing today? We're getting our flu shots, but you guys are going to be brave, right?
And we're gonna have
What are we going to make when we get home?
brownies or cookies. What did we say?
A brownie and a cookie cake.
And then we'll watch.
It's a brownie cookie cake, Daddy.
Brownie cookie. And then we'll watch a movie.
Your socks?
Brownies on the bottom.
Do you want to watch Trolls?
Oh yeah, since you just saw like a little bit of that one. Gwenny's never seen Trolls.
Do you want to watch Trolls, Gwenny? You like to dance.
What are you doing?
Okay. You're just so cute in their little masks.
I know, they are.
So cute. Every year though, after we get our flu shots, we do something special for the kids.
Yeah, they like that.
Mix it, mix it. Keep mixing. Get all, you see all the powder? That's the brownie mix. No? I pulled it out. So the kids lately have found a new love for a show called Bluey, and they have me do several different things on the show.
Both of us.
Yeah. Finny, tell me,
He wanted to.
how does he like to walk?
Well, I did anyway. Twice.
And then what does he do?
And then he massive butt.
Can you show me how he walks that way? Show me how his dad walks.
I want to eat.
And then what does he tell him to do? He's gotta, what does he have to do? Smack his booty? Where are you gonna go? I'll go get you. I'll go get you. Stop.
So the kids are always asking us to do things that they do in Bluey that the mom and dad are doing.
Yeah, like chase them after with a vacuum cleaner.
Gwen is also deep in the middle of Jedi training, and she's always using the Force as Baby Yoda. Oh no! Finny, get her! Oh, she's using a special Force on you. I don't even know. Finny, get her back with the Force. Oh no! She's getting me! Oh no, mommy! Ah! Oh no!
So we live in a really cool neighborhood that has a great community playground that we go to every day, and they have this awesome pirate ship.
Whoa!
Yay! Get down on your booty.
Get on the ship!
Get down on your... We gotta come to the slide.
Come on. Look at how tall this water is. It's never this high. This is the king tide that's doing this. It's usually sand all right here in this area. Just like a dry marsh. Now all of a sudden with this king tide, this water is everywhere. It's like a foot deep.
So we've also been working through the Busy Toddler Playing preschool curriculum, and the kids love it. It's all hands-on and it's based off of play. What did you guys make? You made pigs? Where do pigs live? Go back to the wall. They live on the farm? Those are cool. What do pigs say? Oink, 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 oink. So we just wanted to show you some really cute videos of the kids. They always request. Michaela says, I want to take some cute pictures, some pretty pictures of me, and it's always Snapchat. I don't use Snapchat, but only for the purposes of the filters.
Okay guys, now let's take a look at some of the stocks we've been buying for our $1 million stock portfolio.
So Meta Platforms Inc., previously Facebook, develops products that enable people to connect and share with friends and family through mobile devices, personal computers, virtual reality headsets, and in-home devices worldwide.
If you look at the snowflake analysis, you can see that Meta, it's going to take me a while to get used to saying that, Facebook is looking really good in past performance, financial health, and also growing on the value side. Now if you look at the 1 year chart, you can see that Meta Platforms is up 20% over the past year. And also you can see that it's recently taken a 20% hit from the previous all-time highs. We like that it has a wide economic moat, a 10% debt to equity ratio, a 19% long-term growth, a 32% return on common equity, 0.6 forward PEG ratio, and a 22.44 forward PE ratio.
So what we don't like about Meta or Facebook, in terms of us, we'd like to see a bigger margin of safety. And there's a 178% 5-year return, which it sounds like a good thing, but for us, it's not as high as others that we're investing in or are on our watch list. There are rebranding risk with the transition from Facebook to Meta. And then there's also data privacy and other issues. So Alibaba, Baba?
I think that's right.
Okay. Alibaba Group.
Amber has challenges with saying the word Alibaba.
Okay. Alibaba Group provides technology infrastructure and marketing reach to merchants, brands, and retailers to engage with their users and customers in China and other countries.
And now for the snowflake analysis, you can see that Alibaba looks strong on the value side and in financial health. On the 1 year chart, you can see that Alibaba is down quite a bit. They're down almost 36% in the past year. You can also see that from the previous all-time high, Alibaba is down 57%. What we like about Alibaba is that it has a wide economic moat. It has a 19% debt to equity ratio. And just a reminder, according to Warren Buffett, we should look for companies that are 40% or less as far as debt to equity ratio goes. So 19% looks good for Alibaba. And then 17% return on common equity. That speaks to the management and the quality of the return on the investment that they get on their investments. And then there's a 17.26 forward PE ratio. And we usually look for that to be as close to 15 as possible, so that's looking pretty good. It has a sufficient margin of safety, and we look for that to be around 40% is preferred, and then we'll make adjustments depending on the company and depending on the situation. Also, we feel that this company is undervalued, and the company itself is very diversified. It has a lot of different ownership and different technology, and just a diversified asset in itself.
So what we don't like, there are risks with the Chinese government, the risk of delisting. There's a 69% 5-year return. And again, for us, we would like to see that a little bit higher according to like our other stocks that we have in our portfolio. There's a 10% long-term growth. Compared to Amazon, there's around like 30%. So with the risk that's involved, we like to see that higher as well. And then there's also rising competition like JD.com. Berkshire Hathaway engages in the insurance, freight rail transportation, and utility business worldwide.
If you look at the snowflake analysis, you can see that Berkshire Hathaway looks strong financially and then also in past performance. A little low in the other areas though. For the 1 year chart, you can see that over the past year, Berkshire has gained almost 25%. What we like about Berkshire Hathaway, they have a wide economic moat, they have a 24% debt to equity ratio, a 12% long-term growth, a 6.12 PE ratio, which is quite low for now. They're a well-diversified company in themselves. They have over 50 different companies that they own equity stake in. I think they're up to maybe 10% of each company, like Apple, for example. They have a 24% return on common equity, which is great. Also, we really like and we follow and kind of been mentored by Warren Buffett and Charlie Munger, so we consider them great assets to Berkshire Hathaway and the leadership of that company. They also have a long track record of success in beating the market. I mean, this is phenomenal. Pretty much the best you can get in the business.
And on the other hand, what we don't like, there is Warren Buffett's age. He is
94 maybe?
Yeah, I mean.
And then Charlie Munger, I think I saw he's like 98.
And then 41% of the stock that they have the equity in is allocated to Apple.
Yeah, so that's a risk, just having that much of the money in one company.
So the next top stock to buy now is DD Global. DD Global is a mobile ride-hailing platform like Uber in China, Brazil, Mexico, and other countries.
For the snowflake analysis, you can see that DD looks great on the financial health side and also in future growth. Now for the 1 year chart, you can see that DD Global actually IPO'd earlier this year. I think it was in June. And you can see that they are down 46.55% for the year. From all-time highs when they initially opened, they're down 60%. So not a great looking chart, but I think it does present
a good buy.
Yeah, it presents an opportunity. So here's what we like. They have an 81% long-term growth, which is fantastic. They have a sufficient margin of safety by this point, given that their stock is down 60% from the all-time highs. It's in the Chinese market, and you guys all know how big the Chinese market is and the potential for that in the future once they get their economy sort of straightened out. We're also familiar with Uber's success. We know how they started in the US and how they've progressed. We also know that the artificial intelligence field has a lot of growth potential, and also the ride-hailing services in general.
And what we don't like about DD, it was like Jared mentioned before, it IPO'd on June 30th of this year, 2021. There's also the risk with the Chinese government again, like Alibaba, the chart performance, like you saw before in the one year chart, and then there are just many unknowns with it just being such a new stock. So the last one we have here for you guys is Activision. And Activision Blizzard develops and publishes interactive entertainment content and services in the Americas, Europe, the Middle East, Africa, and the Asia Pacific.
Now for the snowflake analysis, you can see that this one actually looks pretty good. It's almost actually a snowflake or a circle. It's a little lacking on the future growth side, unfortunately, but all the other areas look good. Yeah. It even offers a dividend, which is rare for a growth type company like this. Good value, past performance, and financial health. Now for their 1 year chart, you can see that Activision Blizzard is down almost 12% in the past year. And from the previous all-time high, you can see that the company is down 38%. Here's what we like about Activision. So they have a narrow economic moat, a 21% debt to equity ratio, a 17% long-term growth, a 17% return on common equity, and a 0.49 forward PEG ratio, a 17.48 forward PE ratio. And we believe at this point they do have a sufficient margin of safety to start investing.
And then what we don't like about Activision, there is competition like EA Sports and Take-Two. There have been executive departures that have then created release delays that have then given negative headlines to the company. So thank you so much for watching our video all the way to the end and for sharing those moments at the beginning with us. If you liked it, give us a thumbs up and subscribe to our channel. And join us as we learn, save, and grow together.
Thanks, guys.
Bye.
Bye. Have a good day. Subscribe to our channel. Please. Subscribe to our channel. Can you please?
Say bye-bye.
Get in my
All of our videos are for informational purposes only and do not constitute financial advice. Please do your own research. Consult a certified and trusted financial planner who will put your interest above their own before following any advice we may offer.